Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Monday, the 7th of August. All right, now as we come out of the non-farm payrolls, slightly weaker numbers, right? The market's very sensitive to the US data at the moment, in particular the employment numbers. We saw that on Wednesday's ADP employment numbers followed through into Friday's non-farms, right? So slightly weaker now. If I just give you a look at the data, let me just change screens here. This is the thing, right? It's not far off the mark, right? The 187, I think they're expecting around 200, and the rate, well, 3.5, right? It was, I think they were expecting 3.4 or 3.5 around there. So not far off the mark, but what we did see is a flush out in the dollar, right? Okay, across the major instruments like the dollar index dipped lower, the euro bounced higher, sterling bounced, sort of fraction little bounce here in Aussie Kiwi, not much. They've got different problems going on. The dollar yen sort of drifted lower, as did dollar Swiss. And well, as I was saying Friday, the dollar CAD, well, caught up between Canadian employment numbers, US employment numbers. We had sort of slightly weaker US employment numbers, but much weaker than forecast Canadian numbers. And that sort of led to a bit of discombobulation there on dollar CAD. In actual fact, while we're there, I'll just give you a look. The main opportunities here, especially when there's major data coming out, and say there's US numbers, or every second month there's the US non-farm payrolls and the Canadian employment numbers. Now, I was saying Friday's update, focus on dollar CAD, right? It's an easier trade. Take the dollar out of the equation. You can see here where it's just a nice, easy move. With that weaker Canadian number, Aussie CAD went up a touch, Kiwi CAD, Euro CAD, Sterling CAD, a little bit of drift lower in CAD Yen. Okay, it's got the whole oil situation sort of to deal with, and CAD Swiss, well, it dived lower as well, right? So you can isolate the best trading opportunities, and that's what we're trying to do here, right? It's not about sort of chasing the dollar and the big moves. I know there's all these punters out there saying, no, I trade the dollar, especially non-farm payrolls. But it is a dog's breakfast, right? Very hard to try and manage and anticipate the changes of liquidity, all the data releases, etc. Right, but what does it do for us on the big scheme of things? Now, if we just have a look at the global markets, right? A bit of a tough week for a bit of a flush out on the equity markets. Okay, the Dow Jones, the S&P, and the NASDAQ, almost taking a breather, with these slightly, well, you wouldn't say weaker numbers, but you'd think stronger numbers pushes the Fed into a corner to potentially have to talk about raising rates. And that sort of pushes equities down. We've got a situation here where, employment numbers just drifting a bit. Maybe we've reached maximum employment and the equity markets are getting flushed out. So there's a whole range of things contributing to that. We're just got to keep an eye on things as we keep going. Oil sort of trending very well. You can see a nice little false break there. Across the instruments, this really does set us up, right? This week in particular, it's all about the CPI numbers, right? And if I just bring those across, this is the major sort of top tier numbers that, could potentially provide us with clear momentum, right? They aren't necessarily the best trading opportunities, but they are the ones that will really stir the market up and potentially provide us with momentum that we could take advantage of. Now, coming into Tuesday, you got some Aussie numbers there. Nothing serious. Like neither of those I wouldn't say they're top tier. I'd say they're second tier. Some Chinese numbers. These Chinese inflation numbers will be important for the Aussie and Kiwi. But this is the focus of the week. Now, I've spoken to a few traders about this and talking about trading numbers and following the fundamentals. If you just wanted to follow, if you were trading a large account, right, and looking to make sort of a certain amount of money on each trade, you're not doing many trades. In actual fact, you could just wait for the CPI numbers across the board because they are the numbers that the central banks are proactively adjusting policy and changing policy around, right? So this week's US inflation numbers, absolute standout, right? We've got our consensus numbers here. I'll obviously be coming into these and doing a lot more detailed analysis as we get closer. But when you plan and map out your week, okay, this has got to be a part of it. Now, if you can't get to the screens and do your analysis for before the US CPI numbers, that's fine, right? You don't have to be following this like every move. But if you do have open positions and it's against the dollar, well, make sure you understand that you could see a potential move here, dramatic move up or down or both on those numbers. And then you come into Friday, we got GDP numbers out of the UK and then the US PPI, Michigan consumer sentiment numbers, right? So all in all, it's just this is the main event for the global markets. Okay, US CPI tells us what the Fed are going to do or going to have to do or not have to do if they don't have to raise rates. And that sort of filters through the equity markets, the currency markets, and right through the commodities and the whole shebang, right? That's the key focus. So as we come into trading this week, there's no need to sort of try and come out of the gates very aggressively early in the week, right? Have a look what happened last week, okay? Weaker equity markets, month to date, they've been down. Overall, medium to long term, though, equity markets have had a pretty good run. So try and look through your charts on a like a daily versus hourly. So get some bearings on what's happening. Okay, are the equity markets at the moment, which we've got a bit of a risk-on situation here with the US equity futures, is that filtering through to the currencies? Not at all, right? Equity's up and the dollar's up generally against everything, and actually some of the dollar block are up as well. So don't think Monday's a great trading day. The idea is maybe tuck away a little bit of cash in the lead up to the US CPI numbers, see what happens on the numbers, and then the trading goes from there. I can tell you what, the market will wait for those numbers to get the answers. And there's not much more to it, right? So, and that's all you need to do is go through, keep an eye on the market as we go through the week. You come over and if you're looking at the, say you're looking at the currency markets, then as I said, go through your daily charts. Okay, I've got a template here with all the major currency pairs templates, and then I've also got individual instruments if I want to go into specific currencies, and then I'll come back and have a look at the hourlies and see if I've got any entry levels. And that's it. Piece it together, guys. This is the key event for the week, if not the month. So make sure you tune in. If you're not sure about it, just watch it. Right? You don't have to trade these events, but just watch, see how the numbers come out, whether they're strong or weak, what impact that has on the markets, and what it means for the Fed. You're going to be learning a lot as you do that. All right. Good luck, guys. All the best. Cheerio.